right, ladies and gentlemen, we should be live. Let me double check. If you guys can hear me, let me know down in the comments. Let me know down in the comments. Okay, so it looks like we do have feed. There we go. I start seeing some people watching the video. Perfect. So we're gonna go live right now, and we're gonna talk about the real estate market here in Las Vegas. We're gonna talk about interest rates. We're gonna talk about all the news, what's going on. There we go. I see there's one like. Let me know down in the comments if you can hear me. Hey Larry, how you doing? I see you just commented there. We're gonna talk about interest rates, what's happening out there. Just this week, I received probably like 2 or 3 calls from clients. Oh, thanks, Larry. Appreciate you saying that. You hear me. Everything is good. So just this week, I received a few calls from some clients, and we're talking about 2 to 3 people, maybe even more than that. And they're like, Jack, hey, we've been waiting on the side, but, we heard that interest rates are going to be dropping in 2024. And so we feel like now during the holidays we can get a good deal before the market, starts bringing down the interest rates, and then we pretty much run out. So a little bit of fear from people, fear of missing out from people that are looking to buy a house possibly this year or even next year. And I wanted to cover that. I wanted to talk to you guys about that, that kind of mentality. Why I don't think it's a healthy mentality, but yet we still need to cover what your options are and what I think at the end of the day is going to happen in the next year coming, based on the predictions, but also based on my personal opinion, and based on that maybe you can make a more educated decision on what's best for you. So we got 10 people here already logged in. We're gonna get started in about let's say another minute or so. But I'm going to tell you, though, first what I'm going to be covering. So number 1, we're going to talk about interest rates prediction. Then we're going to get into some news, that we have on CNBC and all the business places, just to see a little bit what's happening out there, what the feeling is out in the market as far as interest rates and real estate. We're going to talk about interest rates and where we are at. We're going to be talking about the 10-year treasury yield and what's been happening lately, because we've been having a big correction in interest rates going downwards, which is really good for affordability. Then we're going to look at the home prices, median home prices here in Las Vegas. And then finally, I'm going to give you my final thoughts on all of this. And if you guys have any questions, concerns, start putting them down there. Larry, appreciate you already commenting. If you have any questions or concerns, let me know down there in the comments so we can have a nice conversation and talk about what you guys think. If I can answer any questions about anything, or maybe any communities that you guys are interested in and you're looking to buy a house. If you have any questions about Las Vegas in general, leave them all down there. I would love to assist. Now, with that said, let's get into this. Let me share my screen with you guys so we can get started. We got 14 people. Thank you so much, everyone, for joining this live real estate updates. Okay, so starting off, experts estimate that mortgage interest rates should peak near 7%, possibly up to 8%, and gradually trend lower, potentially landing between 5 and 6% before the end of 2024. That is pretty much the sentiment that I've been getting out there. And you can see 3 days ago was this article by USA Today. And it should peak near 7 to 8%. And the reality is we already are at 7 to 8%. We were at 8% and we're now correcting down into the 7s again. But it says that we are gradually going to trend lower and potentially landing between 5 and 6%. And the reason why this happened is because there have been a few articles and things going out there that for information, pretty much, has been saying that the Federal Reserve is pretty much done with raising interest rates, which means that the Federal Reserve is the one that controls the baseline of the interest rates right now. As you can see, and this was just a few weeks ago, right? As you can see, interest rates have been trending lowered, and as you can see, we're back to 4.2% for the Federal Reserve. This is the 10-year Treasury yield, and usually mortgage rates go off of this. Now, this is not the mortgage rate that you see, 4.2%, because that is just the lending, what things have been are being lent at. As we see here, we went up to 5% on the baseline, but now we're down to 4.2%. That's over like 3/4 of percentage of a drop within what we were at, like in October, for around 5%. Now we're down at 5.25%. So that's a big drop in only, what is it, 1.5 months, or maybe 2 months, less than 2 months. How is the market reacting to this? Well, we got to go over all that stuff right now. So let's do that first, and then we go over some real estate news overall. But anyway, let me check first really quick. We have no comments so far. Just Larry commented a little bit. So if you guys want to leave some comments, that'd be great. That way I have some answers to some questions to answer later on. All right, so median sales price. I wanted to cover this one first. So right now, actually, let's cover the interest rates. We are at, currently, for the 30-year fixed rate mortgage, 7.03% as of today. And this is just average for I would say 720 credit score or more, and without buying down any rate. So there's $0 to get this loan at 7%. Okay, that means if you pay something to get a loan, you're probably looking at if you buy down the rate, let's say 1 point, which is like 1% of the purchase price of the house. So let's say you buy a $400,000 house and you pay 1 point, which is $4,000. You should be able to buy down this rate to around 6.5% or so. If you do decide to do that, that's not a bad idea actually, to buy down that rate. But honestly, with the interest rates possibly going lower next year, you could always refinance maybe at an even lower interest rate. Anyway, that's for the 30-year fixed. If you do a 15-year fixed, it starts at 6.3%. So that is quite a difference compared to what we were at just a month ago, where interest rates were, I think it was at 8.1 or 8.3% or something like that was the 30-year fixed rate mortgage. So that's quite a difference in a whole month. But how did prices react to this? Let's go and check that out. So if we look at pricing, we're looking at, this is back in the summer of 2022, where the median sales price in Las Vegas was $445. And then we had a big correction, a correction last winter, the end towards the second half of 2022, and prices went down to all the way to $386,000 on the median sales price. So from 444 to 386, that's quite a bit. That's about almost 12% or so correction on the median sales price. Median sales price means the median the median home that was sold, which is about 2,000 square feet, 3 bedrooms and a loft, single family home, right? That would be the median. But now we had ever since the beginning of the year, since January, I've been saying this, prices have have been increasing back up. So we hit the bottom last December at 386, and now we've been going up, and we're up to about, at the peak we were at $415,000 on the median sales price, but now it's kind of trending down to $410,000. And that's what I wanted to answer right here, because we need to see these numbers. Why is that the case? Now you have to consider this is all backdated. So when you get a data coming out on October 2023, right here, it says $415,000 median sales price. That is from homes that got under contract 1 to 2 months ago. So these were homes that got under contract in September. Same thing over here in November. This median sales price of 410 are from homes from people that started looking 1 to 2 months prior, that sold the homes, and they sold in November. So literally what you're estimating here is $410,000 sales price of the homes that sold in September is pretty much what it is. So when we go here to that graph back again on the interest rates, that was back here. This was October right here, October 20th. It was the peak of the interest rates. Probably, back in beginning of October, we were still, pretty high. So this correction, we're seeing it right now in the median sales price of homes. So as you go into the median sales price right here, we see a correction of $5,000. Now, it's not a big deal, but, we have those fluctuations. They do happen often, but it's something that, we have to consider. We're probably going to see even more of a correction soon because we had this spike in interest rates towards September, October, which really was hurting the market a little bit. I could see it in the market with activity going down quite significantly. That would be the next. Also I wanted to go over now the average sales price, however, has recovered already. So this was summer 2022 where we had that peak, right? Prices going up all the way into summer 2022. Then they kind of corrected downwards up until February 2023. And now we're back up pretty much same prices. The median sales price right now is $506,000. Back in May 2022, it was $519,000. So pretty close. And that's different. Average and median is pretty much, it takes out of account all the lowest sales and also all the most expensive sales, like all the luxury homes. So average, however, keeps those in account as well. Now, let's go back to, I wanted to go over volume because this is what most people talk about when they're talking about home sales and everything. So homes for sale, the amount of homes for sale has been trending down ever since we had that correction in the second half of 2022. You can see here inventory has been trending down all the way to now we have 7,000 homes on the market, which is pretty much the bottom of what we had. To compare it, we had back in February 2022, which was the peak of the market, probably looking at 5,000 homes on the market is what we had. Right now we are at 7,000. So it's a little bit better, but nothing really much better. Now, but there's a difference here because back here when we had 5,000 homes on the market, interest rates were 3%, and we had a bunch of buyers buying homes. We only had 1 month of inventory. Right now we have 7,000 homes on the market, but the amount of buyers in the market are completely, there's way less. We had probably right now we have 2,000 homes being sold a month, which is about 3 months and almost half of inventory, which is pretty healthy actually. It stabilizes prices, which is what we're seeing also in the market right now, even though interest rates are pretty high. Now, let's see, 1 second. Any questions about that? Any concerns? Let me know down in the comments. Now, what is going to happen next? Let's go over that together. So, next year, if interest rates keep trending down, we're likely going to see, initially, as soon as interest rates go down, we're going to see more inventory coming on the market. However, that inventory is going to get off the market pretty soon. So in the short term, we might see even more correction, even a bigger correction, because of all the inventory coming on the market. Some of those people need to sell quick, and then you get out of their house, so they might sell it for less to get into their new house. Because at the end of the day, if you have lower interest rates, not only you have more buyers, but you also have more sellers, because the same people that need to buy need to also sell if you own a house already. So as you get closer to what the interest rates used to be, and some people, have mortgage rates at 5-6%, then in that case, they will sell their house to get another house, right? If they need to move. So we'll see a small increase of inventory if we go down to, let's say, 5-6% interest rates. If we see an even further interest rate drop, then that's when we're in trouble, because if we go down into the low 5s, into the 4s, it's going to be over. I mean, there's not going to be any inventory available. Demand is going to skyrocket. People are going to start refinancing all the homes that got under contract within the last year and a half that got interest rates at 5.5-6% or more. They're going to refinance in the 4s. And most of them, well, some of them might sell their house, taking advantage of the market going up in price. So we could easily see here a increase in home prices of, I would say, 10, 15, 20% in no time, because then, the market is going to start working. People are going to have more money because there's more, activity and all that stuff. Now, politically speaking, not that I care about politics, but when we talk about politics, usually on a year where you have an election, you are probably going to have interest rates going down, because the current people that are in charge want to look good, showing that the economy is booming. So dropping interest rates will stimulate the economy, and it will show more activity and better numbers, which is good for re-election. So based on that, I would assume that interest rates are going to be trending down next year. So my guess is that they're going to be probably in the fives, which is going to we're going to have a good appreciation here in Vegas, probably like a 5% or 7% appreciation year over year. But it's not going to be crazy where it's going to go down into the fours. Now, I might be wrong. I don't have a crystal ball, right? Nobody does. But that would be my take. If interest rates trend down even lower, we're in trouble. But what happens if interest rates go up? What happens if, for whatever reason, inflation is not under control? They have to raise interest rates even more to break the back of the economy so that they can try to stop inflation. Well, in that case, you're probably looking at a market still stabilizing, maybe correcting a little bit more, because a lot of people are going to stop buying, but also a lot of people are going to start selling. So the market is not really going to correct much more. We already had the correction. We could probably revisit the lows of, back end of 2022, where we had that correction. But going up, after that, probably, prices going up after we reach that peak of interest rates. Now, the reason why I believe interest rates are going to go down is not because there's no inflation, because there is inflation. There's a lot of inflation. But the way they measure inflation is really wrong. And the problem is, when you measure the inflation the wrong way, just to show people that you have inflation under control, what happens is you're going to see prices going up, even though cost of living is going to go up because of inflation, even though interest rates are staying low, because they can manipulate the data. They can say, well, no, inflation is only 5%, or it's now 0%. So we're going to bring down the interest rates so we can stimulate the economy, and we can get less unemployment and all that stuff. And that's probably going to happen. That's what's going to happen. But in reality, you're still going to have inflation, which means asset prices keep going up, even though interest rates even if they stay the same, probably going to see asset prices going up still. Now, if interest rates go down, and if inflation goes down, which is what I predict is going to happen, because we had a big inflation due to also not only printing of money back in during the virus thing, but on top of that, we also had all the pretty much the government stimulus. But on top of that, we had also the interest rates dropping, and we had the supply getting restricted. Think about all the people that couldn't work during COVID, not allowing, let's say, homes to be built, and all the people with a lot of money in their bank account coming out to buy homes at the super low interest rates. So obviously you had a huge inflation back then due to these conditions that they put us under. So now that we have that calming down and nobody is buying, obviously we're going to see year over year a lot less activity and a lot less homes being sold at a lower price also. So it's going to show inflation kind of settling down a little bit. Same thing with grocery prices. Now, inflation settling down doesn't mean that we have deflation. It means that home prices, the prices of products have gone up. Let's say apples used to be $2 a pound. Now they're $4 a pound. Once they go up to $4 a pound, if inflation slows down, it doesn't mean that now prices of apples goes down to $2. No, it stays at $4 is what it means, even if you have 0% inflation. Now they're targeting 2% inflation, which over the course of 10 years, whatever, which I think is all complete trash that they talk, but that's for another video. But we're gonna get pretty much that inflation still, I think, going up, even though it's going to show on the data that inflation is going down, which is going to allow them to drop the interest rates and therefore stimulate the economy, and you're going to have even more price increases. That's my 2 cents. So let's cover, I'm going to give you guys my opinion on what you should do or not do if you're looking to buy a house in a minute, but let's cover these things. I have another 10-15 minutes left. So I wanted to cover some data with some, articles and things like that we have about the real estate, and then we're gonna finish off and tell you my 2 cents on what you should do or should not do. All right, so we have here CNBC giving us mortgage rates will settle in the 6.5% range by mid-2024, says Evercore. Yes, maybe. It depends on the interest rates and, the baseline of the interest rates. It could go down even further, in my opinion. And that's because we're going to see probably deflation next year, year over year from the data. I'm not saying that we're actually going to deflate in prices. Prices are still going to stay up. But we're going to have that deflation for sure, in my opinion, because now we're getting a lot of, we're comparing the data from COVID to today's data. 2023 was the least affordable home buying year in at least 11 years, Redfin says. And that's true. I mean, interest rates are higher and prices are high too. So, of course. China big property market problem will take at least 4 to 6 years to resolve. Oh, China has big issues with their communism that they have, and which causes them, to pretty much build as many homes as you can, do whatever you want, and now they don't have any people to occupy these homes. They have a bunch of ghost towns, so of course there's going to be a lot of real estate that's going to go down in price. They're going to go through something now. Mortgage refinance demand jumps 14% as rates fall to lowest point since August of this year. So that means in the last month or so, since we saw that big drop, we have 14% increase in mortgage refinance demand. So a lot of people are going out there and refinancing their mortgage if they got a house this summer, at a 7.5% interest rate, 8%. Right now they're going back to maybe get like a 6.5% or so. I don't think it's worth it, but I can see that happening because of the interest rates dropping. Let's see. High mortgage rates have limited opportunities for home buyers and sellers. Well, we know that. Okay. As far as mortgage rates, where we see it in the future, yeah, my guess is this is probably going to stay pretty steady at 4.2% for the next 2 months or so. And then towards next summer, we're going to see interest rates go back to what we had back in, I would say last year. And if I zoom out here, go to last year, we're probably looking at somewhere in the low, I would say 5.5%. 5% is what my guess is. And that's going to increase prices, I think, significantly. Anyway, let's go back to our chat. And let me tell you what I think is going to happen in the market. Now, thank you guys for those that stayed here. We're about to wrap it up. I'm going to tell you what I think. If you have any questions, let me know. But here's the thing. If you need to buy a house, it might be a great time to buy, and I've been saying this, because of the year-end opportunities that we have. Lots of new construction builders are slashing prices on some of their products. Not all of them, but most of them are. And if you want a good deal, you want to get a house even at 10% less than what it's actually worth and what it was selling for back in the summer, this might be a good opportunity. That would be number one. If you are waiting, you're not ready yet to buy, and you're thinking, well, maybe next year is going to be a better time to buy, then in that case, it's not the right time for you. You should wait. Maybe next year, interest rates are going to be lower. You're going to have lower payments and whatever. But if you buy now, you might be able to time the market a little bit better and you might be able to get that lower price, and then you can refinance that next year if interest rates do go down. But if you think, if you're, but at the same time, we could also have interest rates go up because nobody can see the future. So in that case, you might be better off waiting, because if interest rates keep going up, prices might tank a little bit. You might have a better opportunity. Here's the thing: if you have to move within the next 6 months, probably now is a good time to get you under contract with something. Whether it's me, someone else, I don't care. But now could be a good time. If you're more than 6 months out from buying a house, probably not ideal. But that's my 2 cents on there if you're trying to time the market and all that stuff. But at the end of the day, you got to buy when you're ready. It doesn't matter what the interest rates are, as long as you can afford the payment and you can keep that payment for the next 30 years, worst case scenario, you should be good to go. Although that's the worst case scenario, 99% chance you're going to refinance within the next 5 years, but we don't know that, right? There was also one last thing I wanted to cover. There was this page that I read in a Pulte model home, and it's probably going to come out in one of my videos next. But what it said is that in 1971, interest rates were 7%. Okay, 1971. Now, given prices were a lot lower. It took 23 years, 23 years, from 1971 to 1994, for interest rates to go back to 7%. Because ever since 1971, they went up big time, and then they corrected down to 7%. So they went up all the way to 14%. And some of you guys out there, you might remember that because you were already in the market buying, or you were alive, whatever. But then they corrected down to 7% in 1994. Now, if you're looking at buying a house for the long term, consider this. You could lock in an interest rate of 7% today. And in 23 years from now, you have again 7% interest rates, right? But what is your house price going to be? Well, from 1971 to 1994, home prices quadrupled. So if you bought a house in 1971 and you kept that mortgage for 24 years, not only you paid off the house most likely, but on top of that, you quadrupled the equity in your house. That makes sense. If you had a house that was $100,000, it went up to $400,000. So that's just my 2 cents on that. If you're in it for the long term, all these things don't matter. Don't get fear of missing out. Get there, buy a house when you're ready. Money in the bank is not healthy for anybody, in my opinion. You keep money in the bank and you're going to be robbed by inflation, because the value of your money is going to go down. Not necessarily the value of the house going up. It's just the value of your money goes down, because dollars are worth less and less every day. Today you can buy 10 apples with $10. Tomorrow you can buy 8 apples with $10. It's just the way it is. Same thing goes with real estate. So let inflation eat up the mortgage that you have and the interest rate. So if that makes sense. Anyway, any other questions? I see I have Larry is saying, hey, going to watch you on the TV instead of my phone. Appreciate that, Larry. Congratulations on your home. It's he bought a beautiful Pulte. Great deal, by the way. If you guys want to know more of that, let me know. James says, are new home builders offering lower than market interest rates as an incentive? And the answer is yes. They are offering lower than, because of these high interest rates, they're offering, let's say, 5 to 5.5% right now. I've seen them corrected. We were in the 6s or so back about a month ago. Right now, we're down to the 5 to 5.5% again. And compared to the regular market, which you saw earlier, it's like 7% for mortgage. Right now, being at 5.5%, it's still really good for these new builders. But you got to understand, you got to buy it also at a higher price, because the builders, they know if they give you money towards closing costs to buy down that rate to 5.5%, they're expecting to sell the house for a premium. So keep that in mind. Now, it's not always the case. Sometimes, like Larry got a great deal on a Pulte home, you can get a lower rate as well as all the incentives, and you can use them however way you want. What I've noticed also, James, is that if you're building a house and you're starting from scratch, and let's say you're going to build it in 6 to 8 months, I've been telling my clients, well, you might want to hold off to all the credits that you're getting, whatever, it's maybe $30,000-$40,000 in credit. Keep it as a credit towards your closing costs or whatever, and then maybe buy down the rate later on. Worst case scenario, I don't know. I don't think interest rates are going to go up next year, but let's say they stay the same. You can buy down the rate significantly, but it depends on the situation. If you have a quick move in, definitely it might be worth it to do that, and maybe you can get a low price as well as the interest rate low, and that's where those really good deals come out. But it depends on your situation. Diana says that's key. Buy when you're ready. Yep. Anyway, it doesn't look like we have many people today, and not as many people as we used to on like last market update. If you guys have any other questions, let me know. I'm gonna wrap this up. I'm gonna go have all you can eat buffet at Silverton. That's gonna be fun, and hope you guys enjoy your weekend and also your holidays. I might see you guys again before the holidays. We'll do another market update, and peace out. See you guys later.